I'm back in New York. Metaform Labs artificially pumping Voyager. Guys, my deepest and sincerest apologies to all of you for leaving you with Robin all by himself yesterday. And we had Rocco to buffer a little bit, but either way, I'm back. And so are we. Welcome back to Sin City Crypto Live. I am one of your co-hosts, David, and we are coming at you from our studio here in Sin City, Las Vegas, Nevada, with our daily, only on the weekdays, live shows. Before we get into the content, quick disclaimer, nothing that is said on this channel should be taken as financial advice. So please, as always, do your own research. With that being said, let me introduce you to the other guy, Big Rob. What's up?
Hola! It's your boy, Big Rob, back in the house. Welcome! Sin City Crypto. First time checking us out, we are an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information. We package it up in a fun and sexy way. Also, here at Sin City Crypto, we don't just do live streams. We also do the deep dives. And we also do shorts. And I'm also wearing shorts. Did you know that, David?
You're always wearing shorts and flip-flops. Like, we're not at the beach. Right?
Dude, it is hot as hell, bro.
Hail.
There is a heat dome going on in south and the whole damn northern hemisphere, basically. But especially here in Vegas. And dude,
true.
Can you wear socks right now? Are you wearing socks?
Look who's talking.
Are you wearing socks?
Are you wearing socks?
No, I'm just saying. Like my question is, can you comfortably wear socks here in Vegas in the middle of the summertime?
Yes, there's a way. It's called dry fit socks.
Dry fit socks. Yeah. Well, anyways, let's get into it. So taking a look at the chat, we are gonna do a roll call. So we got Tox Stereo 2 on the ones and twos. Strictly Sports also Tox was first in the chat. If I didn't mention that,
Wait, Marky Mark was first. Well, I don't see Tox. I see Marky Mark first in the chat.
Really?
Yeah. It was?
Yeah, it says Tox on mine, bro.
Okay, I don't see it.
So Tox Stereo 2, Strictly Sports, Broke Yoshi, Why You Loud, Gang, AZ Chris. We got Algosaurus, Mr. Tech in here, Hindi, Nordy, Bullish Kenny G. And Big D up in here. Who else we got? Sir Babe, Redman, Fino, Metaspawn, Salvatore, and yeah.
What about my boy Atomic Adam?
Oh, almost forgot about boy Atomic. Where's DFib at?
What about Big Chili Willy?
Is he in here?
Yeah.
I missed him. Oh, hey.
What's
Big
up, Willie?
Chili Willy. What's up, bro? And Marky Mark. All right. So, man, oh man. Inflation.
I got a lot to say about inflation today, but that'll be during a hot take. So let me just kind of briefly go over what we're going to talk about today. And by the way, if you're watching this after the fact, we will have timestamps in the video to help you navigate a little better. So today we're going to be looking over the markets. We're going to be talking about oil prices, looking at the oil chart. We're going to be looking at Bitcoin chart, Ethereum chart, some Cardano on-chain metrics. We're also talking about Europe banning Bitcoin mining. And then what else do we have on the docket? Give me a quick second to check. The U.S. Treasury finds that CBDCs are going to be worth it. We're going to talk about that. And then Helium Network goes down. Why did it happen? Where is it at now? We'll talk about that as well. And some NFT news. GameStop finally launched beta version of their NFT marketplace, and looks like they made about 40 grand their first day. Not too shabby. So that's what we got on the docket today. But, you know, I heard your slushy joke yesterday. saying I went to 7-Eleven or Slurpees. Went to 7-Eleven for why are you laughing, Rocco? You're supposed to have my back.
No, because we already told you were camping outside the 7-Eleven.
What if I was? You don't blow your teeth out with 5 Slurpees. That's all I'm saying.
That's the hardest Slurpee you ever had.
I spent 6 hours in a dentist chair yesterday. It was terrible. But I'm sure you guys had it worse listening to Robin talk blabble all day long. So
did you
I'm back.
Buy anything with the Amazon price Prime Day?
No, you know what I spent my day doing?
What was that?
I spent my day watching my wife and kids laugh at me because my entire face was numb. So every time they would make me laugh on purpose to then laugh at me laughing because my face was all weird.
You know, I actually laugh at you all the time when you talk, whether or not you had dental work or not.
By the way, we did put up the members only video. We did Robin's a month ago. Sorry mine took so long, you guys, but mine is up there. Please go enjoy. Just, typical day, studio, after studio, a little behind the scenes on BitBoy. And then I get to meet my family, my wife, my kids, and see me cook. That was pretty fun. Did you watch it? See me cook?
I did.
You like my cooking skills?
Over there.
It's all about the angle, guys. It's all about the angle of the milk. That's all I got to say. All right, Robin, kick us off.
All right. So, man, what is going on, man? You know what? We've talked about it ad nauseum. What to expect if we came in over the 8.6 that we had last month on the inflation rate. So the go-to metric for the United States to measure inflation is the CPI, and the CPI last month was at 8.6, and this month, lo and behold, we were expecting it to rise to 8.8, and it disappointed or overperformed, whatever you want to call it. Not 8.8, not 8.6. 9.1. And now you have actually lost almost a full 10% of your buying power within just 1 year. And then you compound that with what was inflated the year before, and probably even worse. So I think inflation from the onset of the pandemic and the shutdowns and the money printing to where we're at now, I would assume, per the CPI, we're probably around 15%. Maybe more.
In my opinion, the real inflation number comes out tomorrow. The PPI comes out tomorrow, and that is the producer price index.
So if the CPI, and the CPI is, this 9% is far off.
It's BS.
And we also got to think that, as the demographics go up. So basically, your lower income people are affected by CPI most. You might say to yourself, well, you know what? The price of the dollar menu at McDonald's still kind of stays flat.
You leave the dollar menu out of this.
So, but here's the thing. When you live paycheck to paycheck, your biggest cost is your transportation in your home. And so if that takes up the most of your...
I would say food and home. But transportation, I would say top 3.
You don't think your mortgage, gas, and car payment is the most? Like, just say you make $50,000 a year.
I didn't put
your rent, car payment, and gasoline probably take up, and you can also throw food in there. But essentially, your rent is the most expensive one. Yeah. And so, if your rent being the most expensive one, and the rent is way up. More than this 9%. Now, the numbers say otherwise. We'll look those over in a minute. But realistically, can you get an apartment in Vegas for under $1,000?
My brother, they're pregnant. They're having a baby in about 6 months, and they were looking to go from a 1-bedroom to a 2-bedroom, just him and his wife. And they were paying $1,200. The 1-bedroom wanted $1,600. Okay, so in 12 months, what is that? A 30% raise, 25% raise, increase. And the new apartments they're looking at, they can't find anything in a decent area for under $2,000.
And the Vegas housing market is a little higher than maybe a lot of other cities. However, this is the norm across the board. And when the median price of a new house is $500,000, or at least it was a few months ago, I don't know if it's retraced, but if that's how it costs for a new home on average, I mean, we're not just feeling it here in Vegas, we're feeling it across the nation. And so if you are living paycheck to paycheck and you're not making over $100,000 a year, for an example, your inflation is probably hitting you pretty damn hard, because, not only you're paying twice as much for a tank of gas, but you're probably paying about 30-40% more in rent and or mortgage if you decide to buy a new house. And so this isn't just a crypto thing or, Wall Street thing. This is like, people are struggling out here, man. And hopefully they get this figure this thing out. Also, just some late arrivals, Destroyer and Hit or Miss in here. Welcome. All right, so let's talk some crypto. So we were expecting a big pullback. That's what we've been talking about. I do think it's coming. You do have a situation where you probably have a lot of people everybody was expecting, hey, if inflation numbers come in pretty high, then we're going to get a dump in Bitcoin. That's what everybody's saying. And you know what? When everybody in the market has this general consensus, what happens? People start opening up positions, leverage trading, shorting the market, as an example in this scenario. And so you probably have a short squeeze going on. That would be my assumption, because we went from 19,200 and we are here. Pull up my chart here. So right now, Bitcoin's sitting at $19,783. Now you did see initially when the price index came out right at this time. So it was at 8:30 a.m. So literally 8:30, this thing dumped. Boom.
Dumped down to what?
From 19.9 basically to 19.1.
About $1,000.
And then it hit 18,999. So then here, I think this bounce back, I think, is more or less the short squeeze. I think a lot of people were, woke up, they saw the number, they saw this coming in drastically. I think they were like, oh man, Bitcoin's going to dump. So a lot of people put in short positions. I don't have the metrics to back that up.
Here's the thing. Assumption. Here's the thing. There's so much Bitcoin going off exchanges right now. So when the shorts go to cover their positions, if the liquidity is not there, it's going to naturally, the price will go up. They'll have to let those positions go. I think this is very bullish for Bitcoin.
This is very typical of like big news. It's like you don't get an immediate reaction. I mean, you see it in Wall Street right now. But
Wall Street's not even down.
That's what I'm saying. You're seeing it in Wall Street as well. And so, the pain is coming.
I don't know.
You don't think the market's going to dump, especially coming in?
No. Why? I was, what Forrest tweeted this out today. He said, the markets are exhausted. And so at some point, you keep hearing the same news and the same thing over and over and over and over again. You're going to pay attention to it less. You're going to react to it less.
It doesn't matter what
I think that's what's happening.
It doesn't matter what the traders want to do. Here's the thing. If the markets are exhausted, that's fine. I get that.
What do you mean it doesn't matter what the traders want to do?
No. What I'm saying is that when the businesses, the S&P 500, the top companies in America, are generating less revenue and they're profiting and they're not moving products, when Target is over ordering, and when their normal par levels aren't even or grossly overestimated for what they're actually going to sell. And when companies are taking a loss and then comes layoffs and people are making less money and spending less money, it doesn't matter if the traders want to pump a stock or not. If a company is not profitable and they're making less money, and when their Q2 earnings reports come out and they're just way down and the company's valuation drops, it doesn't matter. Now, at this point, you might be like, okay, well, we expected high inflation numbers. I get that. But what the direction that we're going is an economy that is basically, the Fed is pumping the brakes on this thing. And we're going to get another 0.75 basis point rate hike.
And they're making a terrible mistake. And I will elaborate more because that's going to be our hot take.
And perhaps they might do the unthinkable and raise it 1%.
Well, Canada just did. Canada just raised theirs 1%.
So what would happen if they raise it 1%? I mean, we were sitting here last month saying the same thing, saying, you know what, there's no way they're going to go to 0.75, and lo and behold, they did. And
you were saying they can't go to 0.75.
no, I'm saying the general consensus was
they're not going to go to 1.
Even you came around there towards the end, but even you were like, nah, 0.75 is not on the table. I mean, Jerome Powell said 0.75 wasn't on the table, never was on the table. That's what he said. And then lo and behold, it was on the table. And I guess, the rumor started circulating about 3 or 4 days before. But you know what? I mean, 1%, hey, man. Even if it's not 1%, 0.75 is still huge, man. You think the housing prices are bad now? So taking a look at where the rest of the market is, Ethereum holding at 1,080. Still a great time to buy. And then
before you move on from ETH, I want to show something. I want to get your opinion. Rocco, you pull up my laptop. So we look at a lot of Bitcoin on-chain metrics. I want to show the Ethereum hash rate, which has been in steady decline since the end of May of this year. Less hash power equals typically less security. Do you think the security of the Ethereum blockchain in between going from proof of work to proof of stake, do you think there's a possibility that the network can go down or there could be a hack? Well, what do you think? No?
No. They have more nodes, validators, miners than the next 10 proof of work tokens combined.
But a lot of them are moving to the 2.0. There's a lot. I mean,
they still. Here's the thing: you need 51% of the hash power.
And when the hash rate goes down, it becomes easier to get that 51%.
No, I'm not saying. Yeah, obviously, hash rate go up and proof of work. You have more security, but I mean, at the end of the day, they still have an astronomical amount of graphic cards around the world, all mining, at the same time. Oh. It would be like Ethereum and Bitcoin. There is no way somebody's going to take over the network. Like, period. You could cut the hash rate in half, maybe even quarter it, and still wouldn't be enough. You would have to get. I mean, how many mining cards, Rocco? If you had to throw an estimate, you think there's probably, I would say 3 to 5 million graphic cards mining. I would say. I'm just throwing a number out there. To get to that hash rate, you're probably in the millions of graphics cards. So for someone to take over the Ethereum network, they would have to get a hold of millions and millions of graphics cards, or at least hundreds of thousands of super powerful.
Yeah, no small fish have a 12 card.
Yeah, and it's we could be mining Ethereum right now on our laptops, and then we can just add that to the pool. So Ethereum, no way, man. There's no way, shape or form, Ethereum could ever be compromised.
Okay. No way, shape, or form.
No, not for hash, not for a 51% attack via the hash rate. I just don't think there's any company. I mean, a nation could, but even if a nation did, it would still take them months and months just to set that up. Yeah. But ETH is cheaper and easier to mine now. So if you're a miner, I mean, that's a good thing. I mean, you can get some. You're going to be mining more ETH with less power. So, taking a look at the crypto bubbles. We have Curve Finance up, and then which one is this again? Decred, yeah.
Look at all the
Decred. Decred's been around for a while.
The two biggest gainers are the two of the three biggest gainers are the ones that Celsius has paid money back to.
Got
man.
These are all finance tokens. Aave, Curve, Convex, Arweave does DeFi.
Arweave, man, that is a sleeping giant in my opinion.
Decred. And then Crypto Fear Greed Index, 15. So starting to
come back down.
Yeah, I think we're due for a huge pullback in Bitcoin in the next week or so. By the end of the week, I think we could see the fear and greed index at sub 10, 8, 7. I think we're gonna hit one of those this week.
I don't know if we'll go lowest sub 10,
But last month it went.
I'm telling you,
9,
man,
right?
the Fed is gonna. When does the Fed announce their?
I wanted to say the 27th.
27, I think. Was the
Central Bank 27th. Okay, so actually we got 2 weeks before that comes in, but there's a lot of earning reports coming out as well. And then
the end of Q2. Yeah.
as we mentioned, stock market actually kind of flat, surprisingly. So Nasdaq just slightly up, but I think the markets were anticipating unfavorable CPI numbers, but I don't know. Who knows? I mean, the markets are cyclical, and they do like to go against the general consensus. So, I mean, who knows? But I do think we are. Every indicator points to going lower in the stock market. I don't want to say every single one, but a lot of them. Inflation. So here's the headline article. Inflation rose 9.1% in June, even more than expected as consumer pressures intensify. Now the so the estimate from the Dow Jones was 8.8. Last month was 8.6. And I got a breakdown here. And so we looked at this last month. So here the overall inflation 9.1, but food was up 10.5%, and food at home was up 12.2%. And so just simply buying groceries and going home and trying to cook and save some money.
Cereal is up too.
That costs a lot. Particularly dairy products, so your cheeses and milk, those are up 13.5%. And then your food other food at home, so whatever's not in these baskets is up significantly at 14.4. This is probably all of your processed foods, your canned goods and things like that, because these are all whole foods basically. Now, food away from home is down, so going out to eat at the restaurant is not too bad. 7.7%. And so, when is that gonna, is that gonna stay flat or is that gonna keep going? So full service meals at 8.9, and then snacks are down. So you're a fan of your snacks, now is the time to buy. Now, here's this. Look at this. Energy is 41% up. Energy commodities up 60%, and your fuel, your oil is up almost a full 100%.
Year over year, right?
Yeah. And gasoline, for your car is up 60%. Natural gas up 38.4%. So, and then lastly, new cars up 11%, used cars up 7%. They were already inflated last year, so even more pricey now. Obviously the supply chain issues with the computer chip shortages that go into the cars has been the big problem here. Now, this is what surprises me here. Shelter, rent, and mortgage are up 5%, and 5%. You think that's accurate?
No.
I don't think so either. And
actually, it can be, because they're going from June of last year to June of this year, and we didn't really see the large increase until the beginning of this year. So I think once we get closer to the end of the year, we'll definitely see that thing rise more. So I can see 5% being correct. So we'll see.
All right.
What's up? Are you? I wanted to go over a Cardano metric real quick.
I got one more inflation thing. So there are some benefits to inflation. So Social Security cost of living adjustment could go up by 10.5% in 2023.
Why is that a benefit?
No, I'm saying, well, your Social Security payments that you get, you're going to get more money.
Right, but you got to spend more money.
Well, would you rather not get more money?
But they have to. They have to.
But
So
that's
it's not
what
a
I'm saying.
benefit.
At least people are getting more money
That they have to spend.
Yeah.
Nothing. If anything, it's bad. We're going to run out of money faster.
Well, the Social Security is
It's already on pace to run out of money. Now it's just speed it up.
Yeah. But here's the thing. You're gonna get if you're relying on if you're relying on Social Security to adjust for inflation, you're gonna be getting more of your money. And most people don't get their money back that they put in. So you know what? Here's
Everyone
the thing.
does.
Yeah, exactly. So if you get more now, then good, man. So it's a good thing. I get it. Like,
I mean, yeah, you know, what's the other side?
They're not printing money for the Social Security, so you pay into it. And so I get it. Maybe the people down the road, you know, you're using up more of it faster. I get that. But at the end of the day, like, you know what? The cost of living is way up. Price of rent is up. Price of gas is up. And if you're, if you're retired and basically depending on Social Security to make your to make ends meet, you do need to adjust for that. So, so due to inflation, we're predicting 10.5% increase. So that would be about $175 as an average monthly increase to $1,600.
This is interesting. So they're saying inflation is only 9%, but they're raising it 10%.
That's the estimate. There's other factors. It's not just strictly CPI plugged in from one side to the other. Now, it's interesting.
We're buffering.
So the average rate here is $1,668. And so can you survive off of that much money? Would you be able to live off of $1,500, David?
No.
No?
My kids eat too much food.
All right. So I'll send it over to you. What's your Cardano?
All right. Okay, we're good. All right. So we talk about Cardano, right? Adoption's growing. We keep talking about developers getting into the space. And here are some numbers that back it up. Plutus scripts, if you go full screen, Rocco, if you don't mind, sir. Thank you very much. So Plutus scripts are essentially, sorry guys. We're having some internet issues here, but we're going to get through it. Plutus scripts are at all-time highs, almost crossing 3,000 contracts per day. And so we talk about developer activity. People are coming to Cardano. It's not just BS. It's not just hopium. It's not being a fanboy. It's actually happening. And this is, I would say, the number one way to find out. Are we good, Robin? Keep going? Okay. So Cardano's looking good. What's not looking good is the state of Avalanche. So this is from Masari.io, and this is their quarterly metrics comparing Q3, Q4 of 2021 to Q1, Q2 of 2022. So if we just take a look at the far right column here, okay? So market cap obviously down 80%. Total quarterly revenue down 25%. Total value locked down 75% from $10.5 billion to under $3 billion in a matter of 3 months. NFT secondary volume sales down 78%. Active daily addresses, and this is what worries me a little bit, down 31% from almost 100,000 in Q1 of this year down to 63,000 over the last 3 months. Daily transactions down 37%, and the average fee is also down, obviously. Now, one good thing, the Nakamoto coefficient is up 11%. So Cardano looking good. Future looks bright. Avalanche, at least in the short term, not looking very good. All the metrics are down. So I don't know. What do you think, Robin? Is this to be expected? Do you think You think Avalanche is
Avalanche
gonna
be fine, bro.
Avalanche will be
And
fine?
you know what? All projects outside of Bitcoin and maybe Ethereum are gonna be in shaky territory in the middle of a bear market. I mean, we saw Cardano as an example get all the way down to 1 and 2 cents last bear market. And so you can talk about fundamentals project or whatever it is, but if you're gonna look at users, total value locked, and price, that doesn't really speak to the platform itself. It doesn't talk about utility, the roadmap, its integration, its upgrades. That is all things that are going to be built slowly, and we don't expect people to be on the network using it during the middle of a bear market, or at least not in the same way, shape, or form that they were in a bull market. And so it doesn't surprise me at all. So.
Polygon or Avalanche?
Avalanche.
Really?
Yeah.
You're crazy. Rocco, Polygon or Avalanche? My brother. You just have all these lunar projects are moving to Polygon, while Avalanche's metrics are all down. Interesting you said Avalanche.
Well, Avalanche is building. And Polygon is
Also building.
I think after the merge comes out, there's going to be less demand on Polygon. I think Polygon will scale with Ethereum.
Okay, I think that's true. But when sharding comes, and we know sharding is not coming right away. How long is sharding going to take when ETH finally merges?
It's not about. Here's the thing: sharding will be here within within a year, within a 12-month time frame.
Okay,
and so it doesn't really matter if something launches in 3 months or 6 months or 18 months. You know, if it's functional before the next bull run, that's all that really matters. The same way that Ethereum smart contracts and Cardano smart contracts weren't running, you know, during the bear market last year. Now we're building. And that's what Avalanche is doing now. They're building their ecosystem. Now Polygon, I'm not saying they're not building, but there's a lot of runway in front of Avalanche, and they got a lot of partnerships in the works. So,
all right. Let's look at a Bitcoin and ETH chart before we move on to our hot take. So we're going to revisit this cup and handle, playing out beautifully. Okay, it's channeling down, and you can argue it can also be a bull flag. You take this move from the bottom here, and then essentially now you have a bull flag. Either way, they're very bullish trends, very bullish patterns. And we saw a big spike in volume. This is how you know in a bear market. You see a spike in red volume, and you see the price move, and you see a big spike in green volume, and you don't necessarily see the price move a lot, or you don't see a lot of volume in general on green days. So what will happen when this finally breaks? So typically what you do is you let's say we break from down here, you break up, come back and test this trend line. And then you make your way up. If I double click, don't mind this arrow here because the chart was out of screen. But again, the move we measured was the depth of the cup, and the depth of the cup puts us right around 24K. I think 95% of the big sell pressure, the big leverage positions on Bitcoin are gone. I think they're gone. So if we do see a leg down, you know, I've been talking about 16.5. I know Forrest likes 16. Gareth Soloway likes 12. There's some TA analysts who think sub 10. I don't think we go under 15, in my opinion.
So what I'm looking at, this cup and handle is done. The handle, it's falling way too far down now.
This is a 4-hour chart. If we go to the daily chart,
yeah, the cup and handle is no longer. Now you got a inverse head and shoulders.
No, you don't.
What do you mean you don't?
Where's your inverse head and shoulders?
You have the shoulders. You have two shoulders and a head in the middle.
Yeah, but the head has to be higher than the shoulders.
Yeah, I get it, yeah. Saying that's more of that than it is a cup and handle.
I believe I'm the TA guy, Robin. I'm not sure.
It's not a cup and handle. The handle it dropped too far down. It was forming a cup and handle, but that's out of play now.
So if this drops under the base of the cup, then yes, it will not be a cup and handle anymore. But it has not done that yet. So we'll see. Anyways, moving on to Ethereum. So this one went the other way. So this is an ascending triangle. Typically does break to the upside, but we broke to the downside. And here's what I was looking at. I was looking at this move up here. And I wanted it to come back into this pattern, but it didn't. So now this trend line will serve as resistance. And if we mark a price point, we're looking at about 1155 will be the next major resistance, which we saw 1200 be a big resistance. Broke that a couple times in this pattern. Again, this is the 4-hour chart. So we'll see. Can ETH get back into this pattern? Short term, I would say no. Long term, obviously with the merge coming up, we do believe ETH will spike up to about a little over $2,000. So time will tell. All right, I'm done with charts. Let's move on to our next segment of our show, the hot take.
That's hot.
Also, Bullish Kenny G said he upgraded his membership. We appreciate you, bro. I believe he's a hodler now. Welcome to hodler mode. He said he's not on Marky Mark or Broke Yoshi's level, but possibly sooner. So anyways, we appreciate your support, Kenny G, and everyone else who's a member. All right. We talked about inflation. Numbers are high. So here's the hot take. What will the Fed do after these inflation numbers came up? What will the Fed do? And will it be the right move? Robin, you want to go first? Or would you like me to go first?
Good.
All right. What do I think the Fed will do? I think they'll raise interest rates. Right? At least 75 basis points. I believe 100 is on the table, but I don't think it's probable, but it's still on the table. But that is not the right way to fight inflation, okay? Why do they, just break it down into the simplest terms. Why do they raise interest rates? To slow demand down, okay? But what if demand is already slow? Okay, let's look at consumer spending. Pull up my laptop. Consumer spending since March has gone down over 50% every month, from 1.2% to 0.6 to 0.2. Okay, so interest rate hiking is bringing demand down. So why isn't inflation going down? Why isn't inflation going down? Well, here's one answer. This is a chart of the global supply chain pressure index. And although we've come down a little bit, I mean, we're still at like essentially all-time highs. This is since 1998. If you take my face away, they can see the whole picture there, Rocco. We're still like, the supply chain is not fixed. You want to fix inflation, fix the supply chain. You have countries that are not exporting as much to countries like the US because they're afraid of food shortages. You got China every 3 months doing another lockdown. You have the Russia war. They're not letting Ukraine export any grain. India, the second largest exporter of wheat just 2 months ago, stopped exporting wheat to the world. You got Russia, you got Ukraine, you got India, you got China. These are some of the major exporters of stuff we need to function every day: food, oil, energy. So that's where the issue is with inflation. So you can hike interest rates up to 20%, it won't matter because demand is already down. You need to fix the other side. And the Fed has come out multiple times and stated, we can't control or fix the supply chain. Guess who can? The government can. The White House can. And I don't know the 100% answer. You could start in Russia. Obviously, sanctions aren't working. I'm not going to turn this political because we're a cryptocurrency show. You could start there. The tariffs on China, they've already brought those down. You can possibly open up the pipeline again. I don't even know if that's possible. They shut refineries down. You could bring those back up. So instead of just pressuring the Fed to hike interest rates, which in turn ruins other emerging economies like on a global level, raises the strength of the dollar, the euro's crashing, Europe's in the shits, and we're over here hiking up interest rates thinking inflation is going to come down. It's not going to come down when you hike inflation rates or when you hike interest rates. And that's what the Fed's going to continue to do because they're in charge of this stuff. But guess what? The solution is not on their docket. It's not what they do. And so it's just this blame game of where they're doing this and they're doing this. They're going to bring us into a recession. Inflation is going to stay high and the economy is going to go in the tank and nothing's going to get solved. So what do I think they'll do? I think they'll hike interest rates. Is it the right move? Absolutely not. There is something at the core that they need to focus on, and it's not interest rates. It is not. Because interest rates are doing what they're supposed to do. They're bringing demand down, and demand has been decreasing since March by over 50% every single month, and inflation keeps going up. I mean, I'm not the smartest person. I don't have a PhD in macroeconomics, but to break it down in its most simple terms, why do they raise interest rates? Is it affecting the supply chain, which I believe is the biggest issue? No. So that's the issue. That's the problem. Do I believe that it's something they'll figure out and do the right thing? I don't know. Robin?
You're saying interest rates are a non-factor in CPI
They're not doing
adjustment.
anything.
No, here's the thing. If they didn't raise the interest rates that we're at now, we wouldn't be seeing 9%. We'd be seeing 19%. And so they're putting a break on, and I agree with everything you're saying. You know, supply chain is one of the biggest contributing factors to this. I mean, but there's other factors. You got to think the U.S. economy, which is pretty much the global economy, it has so many variables that supply chain is not one of them. I mean, pull up my chart here. You want to talk about what is the biggest factor? Literally, just look at the analytics. What is the biggest factor to the CPI? Or what is the biggest factor in inflation? Is literally fuel. Fuel is 98%. So what happens when you're in school and you get 100 on all your tests, and then you just don't turn one and you get a 0? All of a sudden, your grade drops down to like an 80.
So then why is core CPI increasing?
Everything's increasing. However, the biggest contributing factor right now, at this moment, year over year, the biggest factor for when it comes to inflation is oil. And you can look at the price of gas, perhaps, yes, but if you want to go to your supply chain issues, the supply chain issues, a lot of it comes from oil. The prices that the manufacturers are getting for their goods, or it has to be transported, are elevated because of the price of gas and oil. And so the oil price is probably the biggest contributing factor.
And you think raising interest rates is going to bring oil prices down?
Nothing is going to stop. Nothing is going to turn off inflation. The inflation is here because we printed 40% more money than we had 2.5 years ago. That's why inflation is here. And so if you want to tame the inflation that is already here, then you basically got to just destroy the market. And otherwise, you just let it run rampant, or you burn money. One of the three. They're not going to burn money.
Bring down prices of goods,
but they can't. The Fed doesn't control prices of goods.
That's what I'm saying.
But what they do is they control interest rates that will drop demand, which will drop the price of goods.
But demand is already dropping.
Here's the thing: if nobody's buying, okay, look at my chart.
But people have to buy fuel. They have to buy food. They have to have shelter.
Okay, but they don't have to buy another car. They don't. You know what I mean?
Yeah.
They don't have. You don't have to go buy another house, and you don't have to. And most of these Fortune 500 companies are not. They're not Kroger. They're not the Piggly Wiggly. They're not all of your grocery stores. And so where you're spending money, what you're talking about, those aren't the Fortune 500 companies. The wealth of America and the economy is in the tech sector. Look at the S&P 500. I mean, first of all, pharmaceuticals are a big part of it. It's like 30%, but the other 30% is tech. And so if you're not buying things you don't need to, you're going to basically halt the market, decrease the strain on the supply chain. If people aren't buying new cars as frequently because they're not making enough money, and basically interest rates are out of control, then at that point, you're not Ford and General Motors, they're not ordering as many computer chips. And so that supply chain eases up. That's one of the biggest bottlenecks. Random goods that you're buying for your home is also a big factor into the supply chains. And so, I think at the end of the day, there's a ton of factors that go into this. It's not, you can't point to one thing. The biggest factor, in my opinion, just straight off of the numbers, and I think we both agree that oil is probably the biggest contributing factor when it comes to an economy. And because everything moves through freeways and across the water, and transports, and everyone goes to work and lives. Everyone has
Everything comes back to oil.
Yeah,
literally.
So if the price of oil is literally up 98%,
but why? But why is the price of oil up 98%, Robin? That's what I'm trying to get to. It's a supply chain thing, right? You have the sanctions on Russia, so they're not buying Russian oil. They shut down refineries to stop the pipeline here, so we're not producing our own oil.
Here in the U.S., the problem is, doesn't matter if we make enough oil for ourselves. It's what people, in the same way that you have a market where people are willing to pay. Doesn't matter if I want to sell you Bitcoin for $10,000. If I sell you Bitcoin for $10,000 between us, that's cool. Between us here in our little studio, it's fine. We can sell Bitcoin for whatever we want. But if the global demand, if all the exchanges will buy your Bitcoin for $19,000, that's the price. Doesn't matter what it circulates here. And so the same thing we said with oil. Doesn't matter if we pump more, or we got more, or we have a surplus of oil here in the U.S. for ourselves. It doesn't matter. So the pipelines and things like that, yes, it could help.
How does it not matter?
I'm saying that the problem is not the supply chain. The problem is with Russia and with Europe. And because there is a supply shock there, we're not exporting enough to fill in the gap from Russia. And so they're raising the prices there.
Sounds like you're talking about supply chain.
But it all stems from the conflict in Russia.
That's what I'm saying.
Both
statements can be true.
The oil, yeah. Well, the supply chain and an oil. I'm not disputing your supply chain thing. The only thing I'm saying.
You just said supply chain is not the issue.
Oil is the issue when it comes to the supply chain. The supply chain is powered by oil. So
Correct.
The biggest factor is oil. That's all I'm saying on that
right.
front. But what I'm saying is the idea of not having any interest rate hike is the only thing that Fed has. The only thing the U.S. can do.
The only thing the Fed can do.
Okay,
not
then what else
can
the U.S. do?
I mean, sanctions. Okay, sanctions aren't working. Maybe try something else. I don't know. Start buying more oil from the Middle East. Open up the pipelines. Bring the refineries back.
Okay, Biden is meeting with Saudi Arabia this week. He's on a trip to the Middle East, and he should buy He's asking the Saudis to produce more oil. First of all, doesn't matter. They can't just magically produce more oil. Like they can produce, I think it was like 8% more oil, which is good, I guess. But then we don't have enough refineries here in the U.S. We don't have enough refineries, so it doesn't even matter.
Why? Because our government shut them down.
Yeah, but here's the thing, man. At this point, your options are, one, produce more oil and then give out enough oil for the rest of the world to make up to ease up the demand, and that requires infrastructure that takes years to build out.
But we already have it, though. We had the infrastructure over the last 4 to 6 years.
We had the pipeline that they stopped.
And we had more refineries. And we shut them all down.
We shut down 2 refineries.
Right.
And
that's a lot of oil, bro.
But here's the thing. It's not... It's still, even in a dream scenario, we don't produce enough oil to fill the needs of the entire continent of Europe. And
we can.
No, we can't. We don't have that there. We never were on that path. We did enough for ourselves, and then we exported extra. But I mean, unless you go back 30 years and then just triple down on your infrastructure. I mean, in the course of, Biden's 2.5 years being in office, that wasn't so dramatic that we cut our production by half.
The infrastructure might not be there, but the oil is there. It just needs to be brought out.
There's oil around the world. Here's the thing. All of this is not as simple as just pulling it out of the ground. You got to have the trucks to transport it, the cargo ships. You got to have the pipelines, the refineries. They got to be able to receive it on the other end, and you got to have all the extra ships to send that. And so you were talking about like what ifs. It doesn't matter. It's not like we have a light switch where we're just
we just keep hiking interest rates and nothing changes. Except people have less money to spend?
Or we could just not hike interest rates and then we can be at 15% CPI.
It's not about being at 15%, bro.
Okay.
It's not about not hiking interest rates. Their quantitative tightening schedule is behind by 90%.
Do you not agree that during the pandemic we had a huge run up in the economy?
Which was a mistake. That was a mistake. That's what started all.
But here's the thing.
That's what started.
If you have a huge run up without any real economic prosperity, and so when you have an economic run up where the economy is making more money and all the valuations of all the companies are growing, but nobody's actually going anywhere, that's not real. And so that's going to pull back, and that's what we're seeing. And so you can sit here and be like, at what expense? Well, you know what? We had an unrealistic, not actually a growth in the economy, but we grew as far as our valuations in our companies, and that was literally inflation. And so that needs to pull back. So you need to stop putting so much money into the economy at the moment. That's it. I mean, okay. In the exact 1-for-1 scenario, you burn 40% of the money in supply. If they're not going to do that. So if the causation is, hey, we had, $5 trillion, now we have $8.5 trillion in circulation, money's not worth as much. Obviously, what do you think the cause of that was? And this is just exacerbated by the supply chain issues. And so
this government has made so many mistakes, and now to sit back and just wait for the Fed to keep hiking interest rates until inflation comes
here's
down,
the thing is that is not the solution. That's their only option.
No, it's not.
I'm just saying. Okay,
it's not their only option.
Then what are the other? That's what I'm saying. When I ask you what are the other options,
and I told you
get more oil. That takes years, 3, 5, 10 years.
Figure out a way to work with Russia. I don't know. Get that conflict to an end.
You're just we as a military dominance, as this major player, and we spearheaded this campaign of ousting Russia, and they don't care. They're just like, you're look at our ruble, we're doing good. If we were to stop, if we were to put our hands up and be like, okay, we're our bad, go ahead, proceed, go and invade Ukraine. No. You can't reel that back.
That's
bro.
not what I'm saying, bro. But sanctions are working, and I'm not a government official. I don't know how the inner workings of government work and what things they have outside of just sanctions. But I don't know, man. Focus on the supply chain, and I think you'll bring inflation down. I'm ready to move on. What do you guys think? Are you guys with me or are you with Robin? If you're a member of this channel, put a Robin face or David face. If you're not and you want to be, the link is in the description of this video. So yeah. Anyways, interesting. We'll see what happens. Do I have any faith that our government leaders will do the logical or right thing? No, I don't. All right, let's move on. Rocco, talking points. Oh, look, I'll pull up my laptop. Oh, we're not going to spend any time, but look at this breaking headline. Yield curve inversion between the 10 and 2-year rates reaches biggest point.
I do want to say that right now, if we're going to go deeper into the recession, I agree that we're going there like ASAP. You think we're going deeper into a recession,
yes.
Right? Okay. You just think it's going to be later down the road.
No, no. I think it's coming. I just don't think that's the right move.
No, but I'm saying, like, we talk about the price of Bitcoin and the S&P 500.
The Fed's going to take us.
You think it's not going to go down right away?
Correct. In the very, very short term, I don't.
Okay. Anyways, if you believe that basically Bitcoin, crypto, S&P 500, all of this gonna go further down the tank, where do you keep your money? Let's just say you have $1 million in cash. Like, what do you do with it? We wouldn't put it in the housing right now, right?
Hell no.
You wouldn't put it in a 401k savings account. You wouldn't would you keep it just in straight cash?
I would cash or
how about the only thing that is positive? The only thing that is going to be green
Dogecoin
within 2 years would be the 2-year bond.
Yeah.
And so getting 3.8%, and you're basically guaranteed not to lose money. And they say that the smartest investors or the best investors in a bear market are the ones that not make the most money, but actually lose the least money.
Yes.
And so, what is the best hedge that you know will not invert and go negative is a 2-year bond?
Yeah.
And so, this is the last safe haven, 3%. Not that great.
You're essentially
But-
lending money to the U.S. government.
Yeah. And at this rate, you're just trying to protect.
Do I
your
want to lend
emergency.
money to Joe Biden? I don't know.
So, yeah, you know.
It's a tough spot, man. It's a tough spot.
I mean, think about it. If you would have in January just exited all your positions in crypto and just put it in a 2-year bond, you would have weathered the bear market phenomenally. And that's what a lot of investors are doing in Wall Street. That's your typical move. And so now you're seeing the 10-year, the 2-year flip the 10-year, and so not good.
All right. Talk about our first article here. New York judge freezes assets of Three Arrows Capital as crypto firm's founders remain underground. A federal judge in New York bankruptcy court has frozen the remaining assets of Three Arrows Capital. Judge Martin Glenn of the Southern District of New York granted the emergency motion on Tuesday to freeze their assets. As part of Glenn's ruling, global advisory firm Teneo, which was assigned to manage the liquidation, was also granted permission to subpoena the co-founders Zhu Su, I think it's Suju, other way around. Anyways, and Kyle Davies, as well as banks, crypto exchanges, and other institutions and firms that have done business with Three Arrows. From his verified account, Zhu shared screen grabs of emails sent by his lawyer to counsel representing liquidators. In those messages, the attorney wrote that the families of the co-founders, quote, have received threats of physical violence. He also said Zhu and Davies have been, quote, working under a lot of time pressure, noting that they had to field queries from the Monetary Authority of Singapore in the last week. Well, did you expect any different? Like, you just think you were just going to default on $20 billion or however much the amount was and just be like, oh, everyone leave me alone. This is so when you do bankruptcy, if the court has two ways, they can either let the board or the firm, the leadership of the firm, to keep going with the liquidations and manage it themselves, or if the court feels like they're not suitable or they're making bad decisions, then they can appoint someone else to take over. And it looks like that's what's happened. Now, here's a tricky situation. It is not, none of this isn't 100% in the U.S. You have Singapore, I believe Hong Kong, Korea, whatever. Either way. Robin, want to share your thoughts on this?
No, I don't really have any opinion on it, honestly.
Yeah.
I mean,
yeah.
it is what it is. It's funny to see the reactions of Suzu, but I mean, not surprised. Obviously they were doing some shady crap.
Yeah.
Or at least playing with extreme risk. Or they just were taking on just crazy amount of risk with other people's money.
Which they were.
And obviously, if that's kind of like your MO, if that's what you do for a living, I'm not surprised when you file for bankruptcy, you're not like, hey, man, leave us alone, man. Like, it's only been a week and you guys are pressuring us way too hard.
We've gotten death threats.
Yeah, of course, man.
Well, you have millions of people's money on the line. What do you expect? Them to be like, oh, guys, it's okay. Pat on the back.
What if somebody just came up to him? It's funny because I'm sure if somebody took 99% of his wealth just in one fell swoop, like emptied his bank account and then just like, and he was just all of a sudden poor.
Yeah.
I'm pretty sure he'd be like, oh, he'd be like trying to fight people and stuff, And so.
Do the fight move again?
Mm-hmm.
Do the fight move? Oh, is that how you fight? See, that's how I know I kick your butt fighting, because you fight like, yeah. Rocco, who'd win in a fight, me or Robin? You can't say I don't know.
Bro.
I'm out of this because I'm the bad driver.
He's gonna hold that. Hey, Italians never forget.
He's still salty about that.
If you would have seen The Godfather, you would have known.
No, if we were all comparing driving Vespas, I'm sure my boy over here, he'd beat all of us.
Wow,
He'd be out there
Rocco,
like,
the disrespect, bro.
You
see how I come to your defense, bro? I want you to
Thank
do
you,
that
bro.
for me, okay?
I do have a motorcycle driver
Damn
license.
it, you're not supposed to say that.
do have a motorcycle.
Well, I do have a
realize.
Vespa, actually. I'm over here back. All right. So this next
I like
article.
Vespas. Can we get a Vespa for the?
My cousin has a Vespa, and
Yeah?
it's
Can we-
terrible.
Can we get one for the studio? Just
No.
so that we can like ride around and go to the strip.
No.
That would be cool.
You can with your own money. I ain't buying. I ain't pitching it. Shit. It ain't coming out of the business account. I'll tell you that. There's not much money in there, but hey. Rocco, pull up my laptop. So this was in the title of our video today. The European Central Bank recommends mining ban and urgent stablecoin regulations. EU lawmakers, with a recent research paper, acknowledged that the digital asset markets were evolving rapidly, claiming that if current trends continue, crypto assets will pose risks to financial stability, therefore need to be effectively regulated and supervised. They published 3 research articles on climate risk, DeFi, and stablecoins. We're going to focus on the mining ban here. The first concern was one regarding the climate, with the report stating that there is a choice between incentivizing the crypto version of the electric vehicle or banning the fossil fuel version, which the electric vehicle version would be proof of stake and non-proof of work, and the fossil fuel version being Bitcoin, other proof of work, consensus cryptocurrencies. Now, if the entire continent of Europe bans mining, Robin, do we agree? Major effect.
In the short term, the miners will. We saw what happened in China. Miners will pick up their operations and go elsewhere and plug into a energy source that welcomes them. And so, yeah, it's not anything you want to see happen. And would it affect the network? Would it affect Bitcoin? Would it affect the crypto space in general? Absolutely. But it wouldn't be anything we wouldn't bounce back from. But what is the EU's issue with crypto, man? I feel like
you want to know what I think it is?
They are on both sides of the fence here.
You know what I think it is?
What's up?
I think obviously there's been talks of fuel rationing, right? Gasoline rationing in Europe. Rocco, you have family that live in Italy, right?
Yes, correct.
They're talking about rationing food, fuel,
Especially now in the winter time.
power,
Yeah.
right? And so what does Bitcoin mining, what does mining need? It needs power. And so I think they're hiding behind this whole climate thing when really they're afraid that if these Bitcoin ASICs are plugged into the power grid, they're going to siphon off power that could have gone to, and which,
I mean, you can't. I mean, they do have an argument. If you're simply talking about the lack of energy in a certain region and that people have to ration their energy, honestly, is that the best place to have Bitcoin miners set up? Probably not, honestly.
right.
And
the
market is also going to reflect that. So I would imagine that if a city is so strapped for energy, the price of energy there wouldn't be profitable. And the same way that if you look around the world, where's the cheapest energy? It's in areas that have surplus. And the reason that it's so cheap is because it's going to go to waste if nobody uses it.
Right.
And so we see hydroelectric dams are the best example of surplus energy. You have these giant turbines that are turning and, providing way more energy than you need for the area. And then you can't really turn that off. You know what I mean? Like you're not going to like slow the turbines down as an example. So you're just going to keep producing a ton of energy. So you have extra.
You leave turbines out of this.
So you're going to have a surplus of energy.
Turbines.
So, but I mean, I get their reasoning behind it. But I just, realistically, you just have people that have companies and industries in their back pocket that are probably more, that, not I'm going to say probably, that contribute a lot more of this global warming and carbon emissions and power usage. Bitcoin is the least of your concerns. So if you're looking at energy usage, you probably should start looking at data centers, the banking system, the transportation system, especially with airlines. You have, a multitude of different things, but nobody's talking about turning those off.
Yeah, and here's what worries me is, yes, do I think we'll bounce back? Yes. But here's what worries me. Pull up my laptop real quick, Rocco. So this is the Bitcoin hash rate. And that big dip was the China mining ban. Bitcoin's price was over 30K. It was at 36,000. And even the lowest it got down to was $30,000. What happens, and I don't think we're going to see this big of a dip if the EU decides to ban mining, but even a half of this dip will bring the price down to what? 13, 14 grand maybe. And at that point, how many ASICs are going to have to unplug from the network because they're just not generating any revenue? They're operating at a loss. And then what does that do to the price? It could have a cascading effect worse than China only because of where Bitcoin is now versus where Bitcoin was when China unplugged from the network.
And we got JTzo, new in the chat. Hola! Welcome, Sin City Crypto.
What's up, JT? Justin Timberlake.
Yeah, the same way that companies are, crypto companies and custodial companies and all of this, as they're trying to find their way, create, or upgrade their networks, the same way that, these layer one platforms like Cardano and Ethereum are building in the bear market, same thing is happening with the miners. And so you might look at this bear market like, hey, now's not a time for us to order more ASICs, as an example. And let's maybe try to find an area of the country or world that has cheaper energy. And let's start moving now, because the time to unplug and move all of your units and go to a different area is probably now in the bear market because it's not as profitable. So I do think you're going to see, in the same way that companies are building in the bear market, I think the Bitcoin hash rate, the miner network, it's going to be shifting and building to become more efficient in the future. Especially if you're looking at your energy costs, you're like, man, our profit margins are really tight. Obviously, if we could save this amount of money by going green, as an example, maybe, doing the wind turbines or whatever it is, perhaps that's something that you can tackle and take care of during the bear market. So
interesting to see how it play out. The ripple effects of a move for an entire continent to ban Bitcoin mining. We'll see. Moving on, some helium news. You like helium, right, Robin? You're a helium fan?
I am. I think it's, I don't know if it's in real world practicality, if it'll take off and replace the current infrastructure. So, that I don't know. It could. And the possibility that it could replace the internet around the world or the internet service providers, I think that is worth an investment. I wouldn't go all in on it.
Imagine how much easier it would be for maybe some underdeveloped countries to have access to internet via this.
And it doesn't have to be all or nothing either.
Right.
But, at the same time, is it, that's not nothing we could use here.
Right.
And so obviously they have a certain demographic or, a certain clientele that could use it, that doesn't demand high bandwidth.
Right. Which,
but
we're few and far between.
Yeah. But what I'm saying is that obviously it's not for everybody. And so other companies do things more efficiently and perhaps, or even cheaper. I don't know if this would be any more expensive than a traditional service provider, but if you're not familiar with helium, they do
bandwidth sharing,
like a hive, basically, where the more users that are sharing, the larger the network grows and the more accessibility people have to the internet.
And you can earn tokens.
Yeah, they use radio waves too for their internet. So then you earn tokens for helping spread the network. But I think the idea is great. And I would love to see them take off. I just don't know if, here's the thing. A lot of people in crypto think that every single sector and every single product on this planet can be replaced with blockchain. It's not really necessary. There's certain things that are just done more efficiently and, in the way that they are now. Now, there are some glaring issues when it comes to the banking systems, cross-border payments, smart contracts, data storage. There's a lot of things that you can use. So there's a ton of utility you can use blockchain for. However, will the internet service provider be better in a blockchain format? That's to be seen, at least in my opinion.
Steph Curry said he likes Helium, but no way they're taking over telecom or the web. They have too much power. I agree.
Yeah.
Well, apparently Helium's network went down, but they resolved the network congestion error in 4 hours. Solana was taking what, 7-8 hours? See, Solana, learn. The IoT blockchain Helium encountered a 4-hour network outage early this week owing to validator troubles that happened after a software update. And the update also resulted in delay in transaction finality. This network congestion had directly caused hindrances in miner rewards and token transfers. To resume normal functions, Helium's team solved the issue by skipping the blockchain forward by a block. That's all I have highlighted here. So, Helium Network reported it's got 43 validators. And so apparently this upgrade was supposed to help enhance the 5G capabilities for the Helium network. And looks like it brought the entire network to a halt. 4 hours later, they're back. Robin, you worried?
Well, goes to show you that they might not be as decentralized as maybe they advertise.
I don't think anything is.
Yeah, no. Well, I'm saying decentralized as they advertise.
I think decentralized is a word that's thrown around way too often.
Absolutely.
Wait, I mean, Solana's website, the most decentralized.
What about blockchain?
What about what?
The word blockchain. Everything is blockchain. Even Wells Fargo say blockchain now.
Right. For me, when issues happen, when something fails, when the price just dips 20, 30%, whatever the case may be, if there is a logical reason behind why that happened, I'm okay with it. In this case, a network update, right? And something went wrong. Okay, I get it. Not too worried. But with Solana, it's the same thing happening. And it's a DDoS attack, and it's the network goes down, and this and that. And you're like, but did you do anything? Did something? No, it just happened. That's what worries me. But with something like Helium, where you know when you update your phone, whatever the case may be, some things don't work the same, and it takes you some time to figure out what's where and what's changed. So for me, I give Helium a pass. Not worried about it at all. I don't think it's going to affect the longevity of the product or the company itself.
You don't find it as an issue that they just skipped the whole block?
That part, I mean, look, I'm not a...
That's what I'm saying. Is it really blockchain if you just remove a chain link in the blockchain? You get what I'm saying?
Yeah.
That's why I was like, really
now,
not,
for me,
not decentralized. And here's the thing. You can look at you can even go outside of the term decentralized and just be like, is it even blockchain? If you're skipping blocks, is it even comparable to a real blockchain?
I mean, I wonder what the other...
I mean, because if you can skip a block, you can probably increase the circulating supply, right? I'm just saying, if you have the admin features to skip an entire block, you probably can do a lot more than just skip a block. That's where I'm getting at.
But we all knew that.
And so I'm not saying that something needs to be decentralized to the point where it can't be changed by anybody and that it can only be voted on by the miners. Like, I'm not saying it needs to go to that level. But at the same time, you know, we invest in these cryptocurrencies with the idea that the product that it is now is not changeable drastically by the developing team. And so I know investing in Bitcoin that the circulating supply is not going to double, or that all of a sudden the transaction speeds are going to take, the transaction finality is going to take 5 times longer because somebody decided to change something. And so that is kind of what you sign up for when you invest. And then going through the process of upgrading is usually front and center people vote on it, things like that. It's not really guided by, like when Ethereum wants to do a change, it's not Vitalik that is like, hey, we're changing this. Like, no, it's a proposal, then it gets voted on, and then it gets tested. You know what I mean? And so to just simply go in and skip a block, I don't really think you're really a blockchain.
Here, and didn't highlight this, but I just was reading it right now. But pull up my laptop again, Rocco. Does a network outage happen as it failed to choose a different consensus group? Although such a situation occurred, it was created in such a way with the capability to be able to move forward in the blockchain by skipping one block.
So it was programmed in for them to be able to do that?
Yeah.
Okay. Well, then.
This was done in order for the network to be able to address such situations.
Okay. So they kind of planned out for this?
Yeah.
Okay. So, I mean, if that's in the
Still,
code, then, if that's in the
though,
code,
yeah,
then,
but-
what else is hiding in the code?
Right.
You know what I mean? Like, what else is in there that, like, oh, yeah, we also designed it to have a self-destruct button. Like, you know what I mean? Like,
And if you guys ever wonder why Bitcoin maxis, and I'm not saying I'm a Bitcoin maxi or that if the Bitcoin maxis that trash talk the rest of the industry are good, but I mean, this is the stuff that comes out and they're like, hey, this is why Bitcoin is number one. This is why Bitcoin is the only true decentralized asset in the market. Which, I mean, you see stuff like this.
Bitcoin had vulnerabilities in the past also, and they also had issues, and, they did do BIP proposals where they did upgrade and change things. And as Bitcoin network has
very
grown,
few and far
but now,
between.
later in life,
Compared.
but in its early days, they used to change it all the time.
Which, I mean, obviously,
when Satoshi was like active, he used to change it all the time. There was actually no like, I think they had like gaps in mining, gaps in like producing a block.
Of course they did.
In the beginning by days. They didn't mine blocks for over days.
Of course.
At the very inception.
I mean, it makes sense. So you're a brand new asset class, essentially.
Well, that's the thing. You can also say the same thing about these, so it's
But it's
fair
not
to
a brand
say
new
that
asset
like
class.
you need to launch and not change right off the rip with these cryptos. And Bitcoin, and I agree with everything you're saying. I'm just saying that like the Bitcoin maxis, they're like, well, Bitcoin doesn't change. Well, like, that's because you took 13 years to figure your stuff out. And now at this point, you're pretty comfortable. You don't really need to change much. And still be secure and functional. But, you can't say the same for all these other emerging blockchain technologies. Like they're going to go through their issues and they're going to change in the same way that Bitcoin did. And then now, if it's 20 years from now and the Solana network is still going down and they're still changing stuff on the fly, and then that's like, then what the hell are y'all doing? Speaking of Solana, here, pull up my laptop. No, you mentioned here they got decentralized just written everywhere. It's funny.
I think Solana is probably the least decentralized.
Yeah, here in the front, Solana's a decentralized blockchain.
There was somewhere where it says the most decentralized or something like that.
It reminds me of Voyager.
Solana is the fastest blockchain in the world. Everyone's the fastest blockchain in the world. You can't be the fastest if you're continuously offline. Anyways. I know I said in the beginning of the show we were going to talk about CBDCs, but that's going to be a lengthy talk between me and Robin. So we're going to save that for tomorrow. It's not very time sensitive. But what I do want to talk about as the last segment the last article for our talking point segment is this: banks representing $2 trillion in assets now offering Bitcoin and crypto exposure to clients. This is per Bitwise. One of the world's largest crypto index fund managers is offering some unique insight into the current state of crypto adoption. Remember, we always talk about this. Follow the money, follow the resources. Where's money flowing into, even in a bear market? Okay, so this should give you some hope. Bitwise's asset management CEO, Hunter Horsley, says private banks and broker-dealers are beginning to take the plunge into the digital asset market. And the rest of what I'm reading is a direct quote from him. There are 7 private banks and broker-dealers that have put our products on their platform for their advisors and clients to be able to get access to the space. They represent $2 trillion in assets and tens of thousands of advisors and millions of accounts. In 2020, 6% of advisors said they were allocating client money to crypto. That grew 50% year over year into 2021 to bring it to 9%, which is still small. Meaningful because it's a giant audience, but small. This year, it's supposed to grow another 70% to 16% of advisors allocating. So we're growing by over 50% year over year. We talk about this all the time. People like Kevin O'Leary have been banging the drums. There is trillions of dollars that is ready to be poured into the cryptocurrency markets, specifically Bitcoin, once there's more regulation. Robin, you want to add your opinion to this? Are you surprised it's not higher? Are you surprised it's not lower? Like, what are you?
I just think this is naturally gonna happen. I think that if banks stand to make money, and we see that people are exiting their savings account, exiting their checking account, and they're looking more to investing. It wasn't that long ago that if you wanted to invest, you had to pick up a phone and call one of those numbers in a commercial, one of these large hedge funds, and you had to basically have somebody. You had to have your newspaper here, and you had to pick your stocks that way. Now, lo and behold, with the smartphone, I mean, anyone over the age of 18 with a checking account essentially buy and invest. And we see that there is a growing desire for crypto. And so if you're a bank and you're seeing money leave your platform and go elsewhere, hey man, that's revenue potential that you have lost. And if people are already using your services and they're leaving to go facilitate another financial service with basically a competitor, because that's what they are, then what is your remedy?
Let me ask you this question, Robin. If banks or Charles Schwab's, TD Ameritrade's, if they decide to get into the centralized exchange segment, right, where they can custody your crypto, you can essentially buy and sell, like on Charles Schwab, TD Ameritrade, do you think that'll put companies like FTX, Coinbase, you think they'll put them out of business?
No.
Because
these companies, Binance is the largest exchange in the world because people around the world are investing in it. And so people around the world aren't going to be using TD Ameritrade. The U.S. citizens will. Coinbase is the largest exchange in the U.S., but that's in the U.S. They're not the largest exchange in the world. And so the same way that all of the entire European continent is going to be using the exchanges still. So will Australia, so will Africa, so will South America, so will all of these other exchanges. So they ain't going nowhere. But now, as far as a piece of the pie here in the U.S., yeah, maybe. I mean, it could also be dressed up in a way it doesn't look like it. Like Webull, for example, who owns Webull? It's like a big company. But
they were either looking to get bought out or they already got bought out by FTX, I believe. I think they were looking to get bought out. But
it's a Chinese financial company.
Webull?
Yeah. There was another one. I forget which one it was, but there's yeah, maybe it's eToro. Anyways, there is, basically you can have like TD Ameritrade. You mentioned them. You can have they can buy up a crypto platform. They can buy up an exchange. Say they buy eToro, for an example, or even if they launch their own Robinhood app, as an example. And they don't have to put their brand behind it, but they can still be the parent company. Right. Same way that Facebook is dying, but Instagram is still king. You can look at it and be like, well, Facebook, but you know what? They're the parent company. And the same thing, you could have, a hedge fund or brokerage firm be a parent company and own crypto services and not necessarily, have that same image.
I think it's necessary, especially with what happened during the cycle with Voyager, Celsius. I mean, these guys, we need like what people are comfortable with, which is their bank. They've been holding their money in their bank forever. They've been holding their investments in platforms like Charles Schwab, like TD Ameritrade. I think for the mass amount on a retail investor, the ones that don't want to custody their own crypto, the ones that don't feel comfortable holding their own private keys and definitely don't feel comfortable holding their money on centralized exchanges, I think it's very necessary. I think it'll be good for the space.
When I first got into crypto, realistically, it would have probably been the smartest for me, if it was available, was to just buy crypto with my bank account through the same website that I check my checking account.
Yep.
Obviously, I don't want to do that now. I understand the inner workings and how it all is, but at the time when I made a bunch of mistakes and I was paying way too much fees and I didn't really know what I was doing and I spent hours researching, and it probably would have just been a lot more simple for me to get exposure to crypto and start to learn by simply going into my Bank of America website and being like, oh, let me buy some Bitcoin. And instead of going through the whole process. Now, you can make an argument that going through the process, you learn the positives and what makes crypto so much better than a traditional bank. Yeah, that's in a learning experience, but that's not for everybody, like you said. And so if you don't have time to research, you don't have time to know what platform is the best one, why not use something you're already using that you're comfortable with, that you feel that will not go under, like a large hedge fund. But those do go under periodically too. So
yeah,
nothing's safe.
But people perceive it as safer.
Yeah.
Right. It's all about perception.
I mean, it is safer. Like,
yeah.
What is safer, Goldman Sachs or Coinbase?
Coinbase, 100%. The joke. I kid.
Yeah.
That was a joke.
So you know what I mean? Like, obviously Coinbase ain't going nowhere, but at the same time, neither is Goldman Sachs. And if you were to tell me, hey, in the next 10 years, one of those is going to go under, like, say we're looking into the future predicting, and the inevitability is one of those two are going to go under, I would tell you, like, oh yeah, it's going to be Coinbase.
All right.
We love Coinbase here, though.
Yeah. All right. Let's get into the very last segment of our show, which is our NFTs. All right, so the first thing I want to talk about with NFTs, and I'm pulling it up here. One of our favorite people in the crypto space, our man Forrest, they just announced, let me see here. They just announced details regarding their Disco Kitties. By the way, if you plan on minting a Disco Kitty, if you're whitelisted, put a 1 in the chat. Details are below. Just going to share really quick. So because of market conditions and everything being down, they're only going to mint 1,000 Genesis kitties to start off with, and eventually they'll get to that 10,000 level. Now, if you're a Genesis holder, you'll have early access, boosted earning events, whitelist spots for other Genesis mints, contest entries for one-of-ones. Now, the mint date is this Friday at 4 p.m. Eastern time, and the mint price is 3 Solana, $100. Over the last 4 or 5 months, especially during when the NFT bull market was here, some of these projects were getting $700,000, $800,000, $900,000 per mint. Complete money grab. 3 Solana, $100 to invest in not just a project, but someone who's been around the space for a while, who's super smart, who has had success in everything else he's done. To me, very low risk. Again, not financial advice. Sin City Crypto plans to mint 2 of them. We are whitelisted. So if you haven't done that, go follow at Disco Kitties on Twitter to get everything. So GameStop. We mentioned this before. GameStop releases public beta NFT marketplace, which intends to deliver low fees and high speeds. Low fees at high speeds. Right, Rob? The marketplace features functionality to enable users to view stats for NFTs, and educational material is also provided. Educational content includes everything from NFT basics to how to connect a wallet to the marketplace. All that's covered. And here is said marketplace. Robin, do you think this looks cool?
An astronaut?
I mean, the interface, right? I mean, is this appealing to you when you first pull it up? Like, is the interface appealing? Do you like,
Looks just like OpenSea.
No, it doesn't.
What do you mean? Hold on, look.
Yeah, here's OpenSea. GameStop, OpenSea. How does that look?
Scroll down. Okay, yeah, they have an astronaut in the front.
Oh, okay, yeah. I haven't been on the OpenSea front page in a while. I usually just go up here.
Just keep scrolling down, like I'm telling you. Then now go back to the other one. They don't have the rankings yet because they're not there, but
right. Yeah, when I open OpenSea, I don't even scroll down. I just look at all my where my NFTs are at. But I think Steph Curry said it was, or someone said it was terrible. They used it, said it was terrible. But looks pretty clean. I haven't gone through this myself, but I think it's pretty cool to have video tutorials. Competition is good. And I'm not saying the GameStop NFT marketplace is going to be the number one, but OpenSea has had a chokehold on the NFT secondary marketplace for such a long time. They became complacent. They became complacent with security. They became complacent with functionality. They became complacent with everything. So you need competition from people like GameStop and Magic Eden and whatever else the case may be, DYDXDY or DYDX or whatever. So that's how the space is going to continue to grow. That's in just anything in general. Competition is good. It's what you need. So, yeah, I thought this was pretty interesting. And I know I mentioned that I think Platform made GameStop like 40 grand in the first day, which is more than what Coinbase got in his first. And then last but not least, the world's rarest whiskey. I know Robin's a big whiskey connoisseur. To be auctioned off as an NFT starting at $75K. Block Bar is, not Akbar, Block Bar, is auctioning the world's rarest 1970 Japanese whiskey as an NFT. Collectors get the chance to own a piece of history with the last masterpiece made by a Japanese distillery, which shut down in 2011. There are only 211 bottles left from the 1970s cask, and this one is made exclusively available as the brand's first ever NFT. Opening bid, $75K. So my question is, and maybe I missed it in reading, but do they get the NFT and the bottle of whiskey or what?
I hope, yeah, that's the idea.
Okay, all right. Because I didn't read it anywhere. I was like,
yeah, for those, they have those with shoes quite often too, where you get the NFT of the shoes. You can put it on your avatar, for as an example, and then you can redeem it for the actual pair of shoes in real life as well.
Robin, if you had an extra $75K laying around, you buy? No. What's your better buy? This rare Japanese whiskey or $75K?
I mean, I like high-end whiskeys. That's just absurd. I feel like at this point,
bro, the rarest.
You can say this. You can make the same argument when
only
it comes
211 bottles left, bro.
Yeah, but essentially, you're buying a collectible. And I'm not saying that it won't hold its value. I'm just saying as far as
do you remember when Jack Dorsey made the first ever tweet an NFT? Someone bought it for like hundreds of millions and they couldn't even sell it for like $2 million.
I mean, this is still going to hold its value, though. I mean, here's the thing, man. Whiskey does very well against inflation. Honestly, man. Like if you buy like a Macallan, we all
drink our sorrows away.
No, you buy like a Macallan 25, man. If you look at the price of single malt whiskeys, and Japan is a very, very big emerging market when it comes to single malts. Probably the number one competitor to Scotland. But I mean, they know what they're doing over there, man.
In Japan?
Yeah, and a lot of the weather. Because Japan's an island, and they have like the fog, and they have a very comparable for their malt and grain, very comparable weather as it would be in Scotland. Yeah. I'm also a sommelier, so like part of studying is that you have to go in depth into spirits, whiskey being the largest piece of research you need to do. So I did spend a couple of years there, and I have quite a big whiskey collection, but. Honestly, I'm not going to spend more than $200 on a bottle of whiskey. I just don't feel like it's worth it to me.
I don't.
I always, especially as of lately, I'm like, man, I could have bought a lot of Cardano with that.
Could have bought a lot of shit.
Yeah. So
Buying ship?
No, I'm not buying ship.
Okay.
And then
what about 10 years from now when you have if you're a billionaire, why not?
you know, money is subjective, and
Right.
as you make more money, you spend money
I'll be
money
stupid
on
when I become a multimillionaire. I'll be hella stupid with my money. I'll probably
and here's the thing,
why
like if you're making a half $500,000 salary, you're probably not buying your clothes at Walmart. And so as your rate of earnings go up,
I think Bill Gates does. Have you seen him?
and then you know, but not everybody's like that. You know, there's a lot of people
No, I know.
that have money that still live.
I
You
don't
know,
believe that.
Sam Bankman-Fried also, like, he still drives like a piece of crap car and wears like flip
Warren
flops.
Buffett goes to the same McDonald's.
Look, I'm not a very
I
materialistic
don't think
person,
so.
but if I'm a multimillionaire,
But yeah, now the wine industry is pretty similar too. They have a lot of the wine industry has a lot of overpriced wines that realistically aren't even drinkable. That's the
Right.
funny thing. At least
Right.
this is drinkable, and you can find like wines from like the 1900s and 1800s, and typically your wines are going to last around 20 years for your reds, maybe 10 to 15 for your whites. Now, when you get into the certain areas of France, for example, there are exceptions. Your dessert wines typically last a lot longer as well, but generally speaking, 20, 30, 40 years at most. But although homage to Rocco here, your Barolos, they will last a good 50, 60 years. So
Yeah.
yeah.
California.
California wines, forget about it.
But you know,
What about the Barbaresco?
but even with
about
an
the
old Barolo,
Montalcino?
you're still rolling the dice there, man. You order a 50-year-old Barolo. I mean, those things are ageable, but I'd say you got about a 35% chance that thing is done.
Yeah.
And so throughout the whole supply chain, if it reaches any bit of warmth, it'll just fall apart. But
I got
anyways,
a-
enough about wine.
Yeah.
You know what?
I got a bottle of Barolo that my father gave me because they had a restaurant.
Mhm.
So it's from the 50s. I had like 4 bottles. I opened one.
From the
It was
1950s?
drinkable. And it
Really?
fluted over. So the things
I
like
had,
temperature and stuff.
I opened up a bottle of Barolo for my birthday a couple years ago from the 1950s. And it was actually amazing.
It was good,
like
yeah.
really good.
It's all about how to store it.
But then, you know,
Yeah,
you can
that's
get
the
same
thing.
thing with like Rieslings. You can get like a 30-year-old Riesling, 50-year-old Riesling. And then, but Rieslings are even worse though, man. So you're taking like a 60. So you get a real old Riesling and things will fall apart.
All right, Robin.
Now, lastly, I just want to, you know, I like to showcase one NFT project here. So this one is the God Hates NFTs. So this one kind of came about after the NFT in New York thing, where they, so here they have a bunch of protesters, and so each NFT has a different sign. You know, obviously they do replicate, but you have like meme lands, kind of quirky.
Yeah. Hey, listen, as long as it's original and not a complete ripoff from another project.
Like this one, I'm horny. I want NFTs. Why not? You know, it's not too bad. Under 1 ETH, so kind of cool.
Shit.
So
Interesting. All right. We are done. Rocco, roll the outro. Friends, family, community members, we thank you guys so much for joining us on this Wednesday, July 13th, 2022. If you're new, welcome. If you're watching this after the fact, also welcome. Timestamps will be provided so you can navigate through the show easily. What are you doing, bro? Anyways, we love you guys. We will see you tomorrow, same time, 10:30 a.m. Pacific time. On behalf of myself, Robin, and Rocco. Until then, we should take it easy. Peace.
I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off. Smoking on the island, say she wanna ride with me. Took her on a flight, said all her bags from Italy. I sent her with a friend, they shopping there religiously. Whoa, whoa, yeah. You say she love me, but that's when she rockin' Prada bag. Said she ready for the next, I won't, not so fast. Slow down, slow down, slow down, girl, don't you crash. Whoa, whoa, yeah. Cause we can mess up that pretty face, but we can fuck up that pretty lady. Tryna kiss up, I'm in your place. Man, this shit so crazy. Never thought I'd be doing shit like this again. Put that effort in, girl, then I will pay you. Crash that thing out the park, now I feel like Babe Ruth, baby. This shit I can't do, baby. No, I can't move, baby. baby. Nothing I can't prove, baby. I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off. I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off. Question marks along your brain, wonder if you should try again. Look at me inside your braces. Can't focus when we face to face. Plenty things I could go say. Name a place I go and pay it. Said she won't know, boo. Been around the world, plenty things I can show you. Taking flights to GA for our soul food. Gotta pay 1K for GA at my shows too. Keep it 1K with my fans even at my lows, ooh. That's why I'm back. Show your man the things I've showed you. Tell your man how I used to hold you, but I won't hold you. Your new man is lame and all I spoke is true. Life won't smoke for you. That sadness comes with coping too. This madness come with shit that's overdue. You strong with yourself, nobody else holding you, but I ain't holding you. You the one I need when I'm off that perk or two. Hit that thing early, got you sleep like curfew. All these lame ass bitches I curve for you. All these packs and pearls I burnt with you. It's up now, baby, it's stuck. They can look, but they cannot. They gon' hate, so I keep that tucked. All this ice on me like pucks. I work hard, don't need no luck. Only thing I need is my Glock. When there's bread, these birds gon' flock. When they dead, I let them rot. I ain't tryna leave you up, I said stop waiting. And I don't got time for these pussy fuckers playing. You gotta read between the lines that I am saying. Ain't got no time for no more bullshit conversations, cause I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off. I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off. Yeah. It's running right on the wall. I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off. I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off. Smoking on a island, say she wanna ride with me. Took her on a flight, said all her bags from Italy. I sent her with a friend, they shopping there religiously. Whoa, whoa, yeah. You say she love me, but that's when she rockin' pride.